Hey guys, welcome to Tuesday Lunch and Learns with Loans by Natasha. I am so excited. I told you guys I'm going live in 2025. I was talking to one of my realtors the other day, and my realtor was saying how much knowledge that myself and my team have on the products. And I don't really get to talk about that. A lot of you guys don't get to see kind of what we do in our surgery room of mortgages. So I know we're just getting started and we got some people coming on in. So we'll give you a few seconds. Excited to have my co-host and my co-team on the line today, Miss Nina Gonzalez. But guys, we're just here today. We want to talk about some good real estate loan officer talk. Everybody, it's New Year's. Everybody always has big plans in January. Well, my team started our big plans in September of the prior year because we really, really, really want to bring it to you, so you guys can get to know us, get to know not only the fact that we're loan officers, but basically how we do loans. So we're going to be having lunch and loans every Tuesday at 12 o'clock. The first 10 people to register for next week, I am going to be Uber eating or Door Dashing their lunch so they can have lunch with us because we know we are very busy, but we have some things that we need to talk about. Guys, please feel free to drop any questions that you have. If we don't get to them on the call, we'll definitely get to you and any topics you may have. You know, my email is Natasha at Greg Rabbit Apple, Guarantee Rate Affinity, rate.com. But you can email me any questions, topics that you want to hear lenders talk about. I saw some stuff on Facebook the other day. One of the realtors was asking some questions. So I like that. But feel free to ask us questions anytime. And I'm going to introduce myself and then I'll let my co-host introduce herself. But my name is Natasha Robinson. I am a loan officer. You're a loan officer. NMLS number 332074. I've been in the industry over 20 years. I absolutely love what I do. I am a community lender by choice, and it's because I want us to win in our communities where people were shooting, where we maybe grew up poor in those same neighborhoods. We are not going to be able to rent if we don't buy. And this is not just for somebody that has low credit and barely making it. I'm talking also to all my middle class people that are making hundreds of thousands of dollars a year that just have a little direction that they need, that are renting downtown at our beautiful high rises downtown and all of that good stuff. You do have to own too, right? And I'm not gonna say you have to, like I'm in charge of you, but in order
you should.
Say it again, Nina.
But you should.
So in order to bring real wealth, in order to bring real wealth into your family and to really do this, and I'm all about in 2025, guys, and y'all gonna hear me preach. If y'all somebody that talks to me on a regular basis, I know a lot of you guys think I don't talk, that I'm just always on the phone all day, but when you get me going, you can't get me talking. But what we are trying to do here is educate so that way we can get to the finish line on what we need to do and where we need to go. So I'm gonna have Nina go in and introduce herself.
Hello. Hi, everyone. Nina Gonzalez here. We are running into some technical challenges. I think our presentation fell off, but just introducing myself, Nina Gonzalez, been in the lending and community lending world for over a decade. I became more on the retail side in 2018, but before that worked very closely with nonprofit lending, renovation lending, and other community focused programs. I just had some restraints and felt that I could be freer to help more people with a bigger, wider product launch and type of different programs to help a wider range of people who may not fit in the community sort of world, but still can benefit from those kinds of programs. So one interesting thing that Natasha says, like how we surgery our deals, right? So I felt like a doctor. It made me feel so important because finances are things that a lot of people don't take full head on, okay? And dealing with your budget can be very, very intimidating. So I see that we were able to get our team back on. They will be going through our slide deck, but dealing with your budget can be very intimidating. My goal has always been financial dieting, right? Making sure that you get your finances in order. So when all of these programs come out and things that you can take advantage of, that you're not waiting to get ready, but that you're already ready when the opportunity arises. So today we're going to be talking about all of the great things that are happening in 2025. We won't be able to dive into everything today. We're not going to be able to dive into everything at once today, but we want to give you some, high level view changes on FHA, right? I know we're going to talk about loan limits. We're going to talk about changes to the renovation. We have some slight changes for conventional, other things for VA, and how you can qualify for VA with a, purchasing a multi-unit, utilizing a property manager. The IDA grant, which we all know and love, that's strictly for Illinois and the Illinois Housing and Development Authority, and we'll touch on that. But if my co-host is available, we can start with the presentation. Hey. Well, I guess I'll get started. All right. So one of the biggest changes that has happened recently is in FHA renovation lending and loan limit changes. Okay. So if we're familiar with FHA, the Federal Housing Administration has an opportunity for buyers and borrowers to get into property only using 3.5% down, right? So, hey Natasha, welcome back. So we have some changes that came on the renovation side of the FHA program. Now that is called the 203K, and Natasha's the FHA 203K expert. Actually, she's the renovation expert. One thing I want to clarify, FHA is not the only renovation product out there, all right? So you can do it conventional. You can do it VA, but a lot of people focus on FHA because it has a lower down payment across the board, independent of property type, okay? So with that being said, we can scooch over to the updates for FHA, Natasha.
Yes, thank you so much. Nina always holds it down. I already knew that she was going to be dropping gems today. These computers, they give you like 2 seconds when they tell you you're on low. So sorry about that. But yes, we offer so many different programs, right? FHA, conventional, VA, IDA. IDA is now has 4 different products, right? Chenoa grant, 203K, home style renovation, VA renovation, as well as one-time close. So with that being said, is that myself and Nina Gonzalez are a one-stop shop. And a lot of people ask—
Wait, you can't just do the one-time close and not say anything. Are we going to talk about one-time close today a little bit?
Yeah, we're gonna talk about everything, girl. But the thing with the I wanted to explain what it means when they do business with us, because I think people are confused, like between the Natasha Robinson and then the Nina Gonzalez. So, and we get that question asked all the time. So Nina and myself, we have 2 totally different brands, but what we do is we collaborate together and we work together, and we support each other through our journey of growing our business, so that way we can offer and be the best, because nobody can do it all, right? We can't help everybody, but we can help somebody, and we help each other with being able to support each other through the program. But yes, We do have, like Nina said, a lot of different products and programs on the list. And a lot of people, a lot of lenders, and Shalonda was here, she's on our team as well. She was just talking about how some other lenders are marketing their program as 100% or 0% down. And a lot of the programs end up being 0% down. We don't market that way, but we do have programs like the Chenoa grant where they give 3.5% down as a grant. So if you're putting 3.5% down and the seller's paying your closing costs, then you're in that 0% situation. But keep in mind, everybody's situation is different. And when you guys are taking and pushing 0% down, understand that, and all lenders are not equal, understand that you are giving your client a higher interest rate in a lot of those situations. Some of these 0% down programs, the rate on the second mortgage is about 12%. And the rate on the first mortgage is about 2 points higher than the average market. So just because it's 0% down doesn't mean it's the best for your client. And sometimes it's cheaper for them to withdraw from their 401k versus taking a higher interest loan, because we want our clients to get in these mortgages and we want them to be able to afford their mortgage. And we don't want to make the most important purchase of their life be the worst decision they ever made, because we do in our communities, including, you know, a lot of us, we do lack 100% financial literacy as it relates to understanding banking, checking, balances, budgeting, and things like that. So there is a lot of people that make hundreds of thousands of dollars a year and spend hundreds of thousands of dollars a year and look up and still don't have any money. So just because you make a lot of money don't mean you have financial literacy. So as the experts in our field, we really want you to understand the grant programs. And I'm glad Nina said that, what she said, because understand what you're selling to your client, because you want to make sure that when your client leaves, they're going to have a great experience after the closing and continue to refer more people back to you. And Nina, I don't know if you want to chime in on
I do. I wanted to say something. I really want to play devil advocate on the 100% financing, because there are those scenarios that it does make sense. Like, we've used them, but we do an in-depth review to ensure that our client not only knows what they're getting, what their monthly payments and interest rate consist of, but that they have the financial backing to do so. And I have an example, right? So I had a family who, they recently started making six figures, right? So these raises and stuff started happening early 2024. So they started, what they did is started paying down debt, started paying down student loans, didn't give them an opportunity to save much money. Their rent was $3,400. And they're like, I think it's time for us to buy, because they were going to go get into a situation when filing taxes this year, they were going to have a high tax liability with no write-offs. That was an excellent example of getting somebody into a sort of a where all the down payment was financed, because they had the financial backing, and the jump in income is why they weren't able to save as much, because they were eliminating debt. All right. So their monthly mortgage payment ended up being slightly about what they were going to pay for rent. And it was a triplex condo townhouse versus the apartment that they were in. So we will look at those other programs to ensure that that we can deliver, right? That we can make this dream come true, and make sure that also that there's a reason behind it. Would I put somebody into that program? Would I put somebody into that program who had zero savings, who was living paycheck to paycheck, who had high debt ratio, and not be right concerned over them being able to manage the monthly mortgage payment afterwards? So those are things that we think about before we put people in those types of situations.
Yes. And Nina, what do you think about this? So this is how I look at it. I take the mortgage payment for the client, right? And then I'll add up how much the grant is, and then how much it increases their payment. And then I will divide that difference. So say, for instance, the grant is $10,000 and they're going to save $250. They're going to pay $250 more every month. So I will divide it by the grant to see if they're going to end up at the end of the term for the grant, if they're going to end up paying it back or paying well over the amount. So when I'm talking to my clients, I'll say, hey, If you pay it back, well, guess what? If you didn't have the money to buy the property at all, then you got to think about that, because being able to take that grant now puts you in a situation where you can buy when the house may be 20, 40, $50,000 cheaper. But as it relates to others, like if you have 50,000 in your 401k, now it may be a different story. So don't want to deter you from using down payment assistance. I just want you guys to start asking more questions. And just because you have low credit and you don't make a lot of money doesn't mean you don't have the right to ask the questions to make sure that you are in the best loan product, for you and your family. So yes, we have lots of programs, and we're going to bring all these programs back in individual sessions for our 12 o'clock. Today, we were just doing more of a general conversation to get a feel on what you guys want to talk about so we can go in depth, because this is a lunch date. So of course, we don't want to leave you on the call too long. But we want to talk about what is new in 2025. And there are a lot of things that are new in 2025. I will tell you, we have a whole new president, y'all. Let's start with that, right?
I'm curious to see where rates go today. So stay buckle up, America.
Exactly.
Let's see where interest rates start heading and our bond market starts rallying today.
I know they're going crazy in the stock market today, but we do have a few new things that we're going to talk to you about today as relates to 2025. The smart buy, we've been going absolutely crazy over the smart buy. If you are a realtor and you have to get those broker agreements signed, we'll bring some programs to the table when they're making a decision. Let them know that you are the resource, that you are the connect, that you know what is going on, and that you are who they need to work with, because you are the ones that are going to get them connected, right? We have the Smart Buy program, $40,000 to pay off their student loans, and giving them $5,000 towards the down payment, and they could stack that with the CHAC grant, right? So this is just one of the new changes that happened in 2025. It actually started at the end of 2024, as well as our FHA loan limits. And I know Nina is loving the multi-unit situation. So look at our loan limits, you guys. Like, we're at $524,000 for one unit property FHA. That is insanity. I remember when I first started and it was 365, and the conventional was at 417, and now we're at 806,000. And if you missed a beat last year, we can go 1, 2, 3, or 4 units on an FHA loan, 3.5% down. On a VA loan, 0% down. And now on a conventional loan, 5% down, all the way up to $1.5 million on a 4-unit. No, you don't have to live in Woodlawn or Inglewood if you don't want to. You can now go look in other neighborhoods. Those rents for a 3-bedroom might be $3,000 way up north, whereas they may have been $1,800. So because we get to utilize income from the other units, your buyer now can put 5% down, up to $1.5 million. That is insanity. And I know Nina got something to say on that.
It gives you an opportunity to leverage your taxes, right? So there's the tax laws in this country favor business owners and people who own real estate. Okay, being able to go into this higher, if it fits in your budget, right? That's what we want to make sure that that's the number one thing, that it fits in your budget and that you're able to manage the monthly mortgage payment. But realizing that you can now purchase a $1.5 million property with 5% down, you might go into your 401k. Okay, you might go into your 401k to get the down payment, but like, I don't know who's online that's familiar with the Tri-Terre area, right? The medical area. I have some residents in there who can afford, on their residence income, who can afford to purchase in that neighborhood where the multi-units are anywhere from 900K to 1.2 million, because of the rents that are collected in that neighborhood. They would not have been able to do that any other way unless these loan limits were increased. Okay. So when you're purchasing a property and it has a multi-unit income, that additional income can help you qualify for that property. So that's why said resident income doctor or physicians can qualify for hire, because the rental income generated from this building helps you qualify for it.
Yes, yes. And guys, more to come on multi-units. But let me tell you something. Go ahead, agents out there, get you a commission on 1.5 million versus 600,000. Take those fingers, add some different area numbers. There is a property in the medical district right now. The seller hasn't increased the rents where it should, and it's only $759 for a 4-unit property in that Tri-Taylor area, right on the market right now. And you want to work with lenders that know the market, know the rents, know how to move and shake in the industry, and we definitely do that. And sometimes we appear busy is because we're on the phone. We literally are on the phone with the clients, giving them one-on-ones, even clients that will never ever qualify. So if you ever can't reach us or anything like that, shoot us a text message, shoot us an email. We definitely get right back to you. But we do a lot of working for the Lord is what I tell people, because even if they don't qualify, I still take my time to put them on a plan so that way they can become qualified. And we want to get our message out to all of our, I call a middle class, the middle class that don't own. We're looking for you in 2025, because it is easy for you to flip that switch and go right into a homeowner by just making a few small tweaks. And with the down payment assistance, did I tell y'all we got a grant that don't matter how much money you make, where they'll give you $8,000, all depending on the address that you live? Oh yeah, we got a lot of tools in our bucket to help everybody, and there's no excuses. If you don't get a house in 2025, you should at least be getting you a plan to buy a house in 2025. And for all my agents that don't own, you heard it from me. I'm gonna need you to buy a house, a building. House hack. It's easy to sell something when you've done it, right?
Put your mask on first.
Build your own, put your own mask first. Build your own wealth first. And they're gonna start listening. I got into real estate. I found out I was a house hacker. I didn't have no Facebook, Instagram. I just wanted to get out of the hood. I wanted to build something for my family, and I just happened to be a house hacker. I just became a loan officer because I needed money right away. But when you are a buyer and you're in the business, it hits a little different. So I encourage all my realtors, even if you're not ready, don't feel bad that you're not ready, but let's make you a buyer in 2025, or let's get you on track to become a buyer, because we want you first, and then we'll take care of your clients as well. And if you're self-employed,
I was just going to say, these loan limits are for FHA and conventional. Can you speak about the VA before you get into that self-employed?
Yeah, good question. So VA pretty much follows conventional loan limits. So they're going to be exactly the same as your conventional loan limits. So VA, you still get the higher loan limits, 0% down. So, and because she said that, and I don't want to get into my preaching phase, if you are a veteran and you are 80% or more disabled, you do not pay taxes in Cook County. So yes, Olympia Fields, almost South suburbs with the $36,000 taxes on a 4-unit. That's zero for you. So now
how about Oak Park, Forest Park.
Yes, Barrington,
River Forest.
Zero for you, right? You don't have to go buy somewhere else. You can get the lower building. I've seen a lot of stuff in Calumet City cheaper because they taxes is so high. Well, now you can buy them a little lower, and you can get exempt from those taxes, and we can do it on your loan approval if you meet the criteria. So once again, we're not here to just make a commission. We will make a commission, but we are really here to build some real wealth in our communities and get the buzz out that it's the time to buy. The loan limits are where you need to be. The down payment is where you need to be. We have down payment assistance if you need help. We can teach you how to leverage your 401k and investments. And it's just no excuses. And we're here to help you guys as realtors deliver this message to your clients, so that way we can get our buyers into the homes before my students that are in the UK and in Canada and all of those places coming by the property right in the neighborhood.
They're
buy
coming.
your blocks first before everyone else does.
They do come.
Other new things that we want to bring up this year. As you guys know, I'm a renovation specialist. I do all things renovation, from FHA 203K, home style renovation, and VA renovation. VA renovation, now we can go to 1 to 4 unit, right? And did you guys remember that 203K streamline? 75,000 now, not 35,000. 75,000 is a streamline. That is a big deal. That is a $40,000 increase. In addition to that, on the full 203K, we can finance 12 mortgage payments, not 6. Big deal for 2025, right? A little negative poach for you guys for conventional, and this is going to hurt your deals. So just to make sure you understand, so that way you can at least ask your loan officer, if we're not, this question. If your client is buying a multi-unit and they are going conventional, they have to pay rent in order to use the rent from the other units. So that is a deal breaker in 2025 that is hurting a lot of deals. So before you get in a car and use your gas, you want to make sure that you're asking your loan officer the right questions. So if you know that your client lives with her mom and you know that she's going to look at a building, you cannot count the rent from the other units if you do not currently pay rent. That is a really big deal, guys. When you work with me and Nina, we're going to pre-underwrite. So that's not going to happen to you on one of our files, but it costs a lot of money and time to pre-underwrite these files, and every lender is not going to do that. So just ask that question when you're in the car, because that is going to hurt a lot of conventional deals in 2025, because that is a great guideline. And for any of my loan officers that are listening, give us a shout out. If we helped you today, I learned stuff from all loan officers on a regular basis, but you cannot count rents for conventional to qualify if the borrower does not pay rent effective January 1, 2025. So that was one that hurt. Nina, did you have any questions on some of the new guidelines?
No, I think we can do a deep dive on each one. I mean, there's so much to uncover in all of these, so I think that there's going to be other opportunities to do a deep dive. But I love that you shouted out other loan officers, because I want to teach other loan officers how to do. I want to teach other loan officers how we structure and navigate and fix and remedy deals. Because I'm gonna tell you something. If you give me an approval, I'm going to figure out how to, if we have a structure, I'm going to figure out how to make that file close. Okay.
And that's why I love it at D-Truth. That's why we vibe. Yep. But whatever we can do to help loan officers, a lot of people come up with their own vision and views of what they think of a loan officer. I am an open door. I help loan officers every day. I'm not a gatekeeper. I give it all to you because it is enough business for everybody out there in these streets. So what we try to do on our team is get you that information so that way you can be dangerous. So if you do have a loan officer that you're working with, you just love them and you want to support them, but you feel like they need a little collab, tell them to give us a call. We have no problem. And I'm going to learn something from everybody I work with, regardless if it's a marketing tip or regardless if it's a new perfume or to wear. I'm gonna learn something that's gonna bring value to me. It's just who I am, but I try to give back as well to make sure that everybody in our circle is speaking in terms of the guidelines, because when home buyers have a bad experience, they may never try again. So it is our fiduciary responsibility to make sure that we are giving correct, accurate, and encouraging and inspiring information to these buyers. I told y'all we work for the Lord, but we are, because if they try one time and it doesn't work, they may never come back. So it is very important that we be as educated and resourceful. And I'm gonna tell y'all another little secret about me. I have a lot of lender friends, because if I cannot do the deal, I will send it to somebody who can, if I think they're a better fit for another lender's program. Because once again, the more owners we have, the more better our communities are going to be, and that's just hands down. So like I said, I'll go out of my preaching mode and then we'll go into and this slide is old, but I just wanted the agents to know what borrowers need. If they are W-2, we only need the last 2 years W-2. So that will be 23 and 24. And then we need 30 days of pay stubs, 1 month bank statement. And I repeat, that is it, right? So a lot of times borrowers want to send us a whole bunch of information. Please tell your borrowers to only send what we ask them for, because that is all we need, is what we ask them for. I had a client upload a lease. I wasn't using tax returns. that deal didn't work out for me, but I did get it to a different lender that could assist. She's amazing. I know her from the industry, right? So what you want to do is you want to make sure that the borrower is only sending us the correct documents.
The documents, only the documents that are required, nothing extra, nothing unnecessary, right? And if you have doubts over what needs to be sent in, talk to your loan officer or their support team to ensure that you only send in what's required to get your file approved.
Yep. And it's so important. And me and Nina try to make sure that we have the time to chat with your clients so that way they can feel comfortable, so they can let us know what's going on. The biggest things on bank statements, I'll just give you a little cheat sheet for FHA, is insufficient funds. Sometimes when they have more than one of those, it can make their underwriting process a little tougher. So what we try to do on our onboarding consultation is to ask those questions, so that way we can make sure they're ready before they start submitting those documents, right? And if they're self-employed, we do have some programs that require only 1 year tax returns. So they should always talk to us first before they just start sending documents, right, in our systems. And we always normally need the last 2 years. If it's 2 years, and we won't go deep into the profit and loss, but if you hear a client complaining, like they're asking me for everything, they want a profit and loss, where if they've owned their business from March 1st through September, I don't know, or from January through September, I don't know how much money they've made. So the underwriter will want to make sure that they're on track for what the tax returns say. So once again, we try to get as least documents as possible. It's just like going to court, but there are some things that are required for the client to get to the finish line. And if you're talking to your client and you're onboarding them, I know some agents do, ask them for the last pay stub from 23 and 24 and give it to that lender. And that's a cheat sheet, because I'm giving y'all some real gem drops there, and that will prevent us from waiting on third-party verifications. And you could probably get your pre-approval correctly done within about an hour if they give those last pay stubs, the last one in 23 and the last one in 24, and we can get you a fully underwritten file with those basic documents. Yes. And then, of course, you guys can scan the link. You can just Google Natasha Robinson or Nina Gonzalez. You will find our links where clients can go ahead and apply. They can also do an appointment to schedule a one-on-one consultation. I'm an early bird. Me and Nina both start early. We do break a little bit in midday to get the kids settled, and then we generally will work later until about 8:30, and we are on the weekends. Reason we do that is because we want to make sure that we're available to the clients, and also because they don't buy us lunch anymore. They have us on Zooms a lot between 10 and 2. Now they don't have to feed us. So sometimes we're getting updated on company policy and guidelines and things like that. But we do call our clients back, and we do work pretty late as well. Do you want to chime in on that, Miss Nina?
No, it just makes me laugh. Well, when you started this off, you said that we do surgery on our files. I'm like, okay, I'm a doctor.
You are. You didn't know. You a doctor and you working for the Lord. That's what you got up to school. Yes. And I know we're hitting 12:50, and we was trying not to make this long, and we will keep you guys forever. If you guys want to talk mortgages, you guys can come to our office. As we say, pull up on Wednesdays. We do a lot of work with our realtors at the office, but we talking about mortgages all day long, every day. This is what we do every day, all day. But we are having our Agent Advantage training platform. Guarantee Rate has a multi-billion-dollar system that has been put in place for you as agents. I am having a Zoom for that on the 31st, and I won't be the speaker. We are bringing on the Guarantee Rate staff to go over the program and the product, so that way you can utilize it for free. And I encourage you to take advantage of everything free in 2025. So that way, before you start spending money, take advantage of your free stuff. But this right here is going to link you to so much information, so many speakers all around the world that have been successful in your career, that are telling their story through this platform. So once again, scan Friday the 31st. This is for you. It is free. And once you sign up, you can utilize the system for free. And it's really going to help you grow your business as well for 2025.
Not only with coaching, there's all these awesome coaching benefits, but most of all for the flyers and the financing, and the flyers and the content and the marketing that you can do. We do have a plug and play where you have a database full of flyers that all you have to do is select one, download it, and upload it into your relevant social media platforms or spread it out to your database, and it keeps you relevant. So you're constantly getting good, viable information out there. Another thing that I see realtors when they're creating marketing pieces, they forget to put all the required disclaimers, right? You don't want to get dinged from compliance on that. Make sure that all of your marketing has the proper verbiage on there, and this platform allows you to do that.
Yes, and just so you know, it's an agent cheat sheet as well, because it basically gives you all the guidelines for the program. So if you pull an IDA Smart Buy, it's going to tell you the minimum credit score. It's going to give some bullet points where you can look like you really know the program when you might not. But it's a good cheat sheet. So for you to get out there and do your buyer consults, there's PowerPoint presentations for your buyers. And I know that some of the companies that you guys work for have that too. But once again, if it's free, I'll take 3. We're going live in 2025. And for my marketing strategy, I want to exhaust everything that I already have going and everything that's free first. And then I'm going to start pouring more money into it. But I don't want to spend thousands of dollars on something and I haven't taken advantage of what's free first, right? So that's pretty much what we have. So feel free to scan in. And then if you have registered for this Zoom, you will get this email for this Zoom to sign in as well. And that's pretty much, I think that was the last slide, but you can connect with me anytime. I am Loans by Natasha. I am your loan officer, and my special guest is
Nina Gonzalez, Loans by Nina, on every social media platform. If you want to get a hold of me, you can email me at it's a new email address. So Nina@ninagonzalez.com.
At Nina Gonzalez. See you guys soon. And thank you so much for joining. And we will see you guys next Tuesday. Lunch and Loans. Don't forget, first 10 people, I will be sending you lunch. So that way you can have lunch and hear me at the same time. Win-win, and have a great day.